Yes, the company, one of China's biggest renewable energy providers, saw its share price more than double on its Shenzhen debut. The IPO price was $1.49 and it closed at $3.64. That's an increase of 144%. At one point, it surged by 198%, triggering a brief trading halt as volatility control rules kicked in. It raised $3.6 billion in Asia's biggest listing so far this year. There was heavy demand from retail investors, with this portion more than 680 times oversubscribed. And the IPO comes amid a boom in Chinese mainland listings. A-share IPOs in the Shanghai, Shenzhen and Beijing exchanges have raised more than $7 billion in the first half of 2026. That's up nearly two-thirds from the same period a year earlier. Zhang Zhiwei is President and Chief Economist at Pinpoint Asset Management.
I think it's well recognized in the market by investors that it is in the right sector. It has an interesting narrative. This alternative energy story is very, very topical among investors. And also, it is, a rare case that has been approved to be listed in Shenzhen Stock Exchange. Originally, this stock was listed in Hong Kong. So, it shows the government policy support. I think that's also a reason why it performs so well today.
Why do you think this listing proved so popular, particularly among retail investors?
Yeah, I think the retail investors probably look at a few things. Number one, this alternative energy story is gaining momentum, particularly after, what happened in the Middle East, that this sustainability of alternative energy and also from a national security perspective now is gaining more momentum. And secondly, I think the government support to approve this listing in Shenzhen Exchange shows that this particular company is well in line with the government policy agenda. So in coming years, it's likely to perform well.
Why is it so significant that the listing was in Shenzhen?
Yeah, Shenzhen, compared to Shanghai is more of a conventional stock exchange that has a broad range of stocks get listed, whereas in Shenzhen, some of the more tech-oriented or more sort of new economy-oriented stocks quite often get listed. So there's a big difference. But I think it's more about this particular company itself that originally, again, listed in Hong Kong and now approved to be listed in mainland China. And that, is a very rare case. I think it hasn't happened in recent years. So it's the first case recently. So that shows really, probably some policy support for this company.
A-share IPO activity has been picking up this year. Do you expect that to translate into larger and more frequent listings?
I think so, but it's also a structural story, right? So if you look at all these IPOs, not all of them performed as well as this particular stock. So investors are interested. They are ready to allocate capital into IPO market, but they're also picky. I think you need to find particular stories and tech or alternative energy or some other sectors that perform well, and then they get overwhelmingly support from the investors. So I would say there's a divergence across different sectors, but overall, I think if it's a good story, it's a good sector, then you don't need to worry about the inflow from investors to allocate capital into those sectors.